Welcome back to In Business. We're joined again here by Harvard University Professor Niall Ferguson. Last time Bloomberg spoke with you, you said you were expecting a 20% drop in the dollar. We're at a 14-month low. What's your forecast now?
Over the next 12 months, we clearly have further to drop. I mean, it's going to be volatile. There'll be bounces up. Every time things look to be slowing down, every time we get a check in the stock market, we get almost perfectly correlated dollar rallies. And then when things begin to look a little bit more buoyant here, down goes the dollar. I think this is a fascinating story because of the link that the Chinese restored between their currency and the dollar. Because what we're seeing now is not just a perfectly natural dollar depreciation, the kind of thing we saw in the 70s and the 80s, the kind of thing you'd expect with a current account deficit as large as we have. But we're also seeing a Chinese depreciation, and that is really hurting the rest of the world. This is the thing that is causing the most pain in Japan and in the Eurozone. And I think that's a story to watch closely, because right now it means that China plus America, what I call Chimerica, is shifting all the pain of adjustment onto the rest of the developed world. Onto the Vietnams, into the Indonesias, into the nascent. It's actually more the developed world that is taking the strain here. The emerging markets are rallying pretty much in sync, with China taking the lead and India and Brazil also growing strongly. Yet that's what we're hearing more about, intervention. Yeah, I mean, I don't think that's the big issue here, really. I think the big issue here is the lack of intervention by the Japanese and European monetary authorities, who are just essentially getting stuck with currency appreciation at a time when their economies really need the opposite. I mean, those are the economies that have been the most fragile. If you just look in terms of growth performance, some of the worst numbers for this year will be from the major developed European economies and for Japan, not forgetting Russia. And those economies are coming under some real pressure as a result of currency appreciation. The Brazilians took action. I mean, they could see that they were going to get squeezed this way. Those who don't take action, who get on the wrong side of this dollar renminbi slide, those are the economies that are going to really suffer. So is an unofficially weak dollar policy, is it the right policy? I mean, should it be the new norm? Yeah, it is the right policy for the United States. In fact, it's rather hard to see what other mechanism the U.S. currently has to jumpstart this economy in a way other than endless fiscal stimulus. A weakened dollar is going to boost American exports, and that's pretty much what you would predict, given the imbalances that have existed. My worry is that Chinese link to the dollar, because there's no way that Chinese currency should be weakening. It should be appreciating. Historically, it's completely counterintuitive that that currency should be depreciating at a time when it's running surpluses and making massive accumulation of reserves. So that's the major distortion in the world economy at the moment. Nobody talks about it in Washington because actually it's not such a problem for the US. And the weak dollar, which you actually have to translate as weak dollar when Americans say we want a strong dollar. The clue is this: the more American policymakers say they believe in a strong dollar, the weaker the dollar is likely to get. Lastly, 2 p.m. today, we are expected to hear something from the Federal Reserve. Not expected to be much. But what is your outlook there on when the Fed should start hiking rates? It's been almost a year now. Well, I doubt very much if the Fed has been massively impressed by that third quarter number, which you mentioned earlier. It's not a sustainable growth. There's certainly nothing there that would argue for monetary tightening. So I think it will be steady as she goes, and the language will be deliberately obfuscatory, because they don't want to commit themselves to a premature exit. So Fed speak, expect nothing. All right. Thank you so much, Niall Ferguson, for joining us here in studio.